Hello everyone and welcome back to Elysium Trading Empire channel. So first thing I want to say is thank you. I didn't expect so much love in the comment section and so much feedbacks. So I'm very grateful for all the people that liked and commented the video. And also, so the subject of today is a subject that has been asked in the commentary section by someone. So he asked me to make a video about daily bias and how I determine the direction for the day. So here we go. I made a video based on two setups I took this week live. And so I decided to make a video on how I determine my direction in these two trades. So this is the week of May 30th to June 3rd, 2022. So first things first, is there really a daily bias? I would say some days you have only one direction to trade. I mean, don't have many setups in the other direction. There are only setups in one direction. So most of you probably have seen those types of day where the price just goes straight up and up and up and up, or down and down and down, and takes up all the buyers or all the sellers. So only one direction. And I know in my early days of trading, I used to, in those types of day, I used to get stop losses and stop losses and stop losses, always stopped out. And it was, I remember it was days like this that ruined up my accounts. So when you encounter days like this, my advice is either you try to find a setup in the same direction of the impulse, or you just stay on the side. You don't trade. You know, waiting and not trading is also part of, and also major part of trading, I would say. Because by not trading, over trading, you are saving your capital and your psychology, and you know, it's a lot of things that are not visible, but that improve your performances overall. So some days you can trade both directions and be profitable, and even sometimes in the same session. Sometimes it's like London bullish and New York bearish, but sometimes you have like some ranges or something like this, and you can trade like you can be a buyer or a seller, and both can be profitable. And we will see both cases in two different live examples. So first example is GBPUSD live trade that I took on Tuesday of this week. So let's start with the daily chart. So you can see we have just taken buy side liquidity. So now I'm targeting this sell side, but does that mean that the next day, for example, look, this day we have taken this buy side liquidity. Does it mean that next day is bearish? No. So we cannot determine daily bias only looking at the daily time frame. Okay. So we need to look further in lower time frame, and that doesn't mean also that the trade is just going to go straight down and target this sell side liquidity. We can still go up and down until we take this sell side liquidity. So let's go down in H1, 1 hour time frame. So here the reason I didn't want to sell at first is because I wanted the price to go in this daily fair value gap and hold low before really getting serious about selling. However, you know, the market does not deliver always the scenario you are looking for. So you need to adapt, and every day you have at least one setup. So yeah, you just have to look for this setup during the day, and then it's not your business to see if it will go there or go down before, etc. An important point to remember is we are trading to make profits, not to be right. And this is very, very important, because even me, sometimes I want to be right, but now I'm more about just making my percent of the day, and then I don't care, you know, if I'm right or wrong or whatever, because I developed enough self-confidence, and I know that every day I have, no matter what happens, even if there is a crash, or even if my prediction were right and I missed the setup, I still know tomorrow I have another chance. So this statement makes me feel more secure, more calm, more peaceful, and therefore I'm less tempted to overtrade, or, you know, to enter a trade by fear of missing out or whatever. So this is future buy side liquidity. Why? Because we haven't made a break of structure yet, so we haven't induced people to sell yet. People are still buying in this area, at least this order block in 1 hour. So here we have made a relative equal lows, but this didn't go below this week, so people are still looking for buys. Plus we have a positive order flow. Okay, so people, like most people, will be looking for a buy rather than a sell. That's why, even though I wanted to go in this area, I know that we need at least to trap some buyers and to induce more sellers before going here. Okay, so my bias, looking at the 1 hour, was sell. Now we go right into the 5-minute chart. So I expected, so this is the day start, huh? You remember, 8 o'clock Paris time. So it's Frankfurt open, it's not London. So we had this short-term high, and we had a nice fair value gap in 5 minutes that created the displacement. And I expected an intermediate term high. So I expected at least some inducement before selling, because here, if I was selling right there, people were induced to sell. Okay, so we need a break of structure in the other side for people to be buying, and then for creating more liquidity, etc. Now you must know the logic. So here we had some structure forming, and I was expecting a break of this high to take some liquidity above, because look here, we have an unmitigated order block. So all the purple boxes for me are trap order blocks or fake order blocks or whatever the name. For me, it's order blocks that are unmitigated and that people will want to sell. And for me, it's liquidity. So now that we have broken this buy-side liquidity, I am able to look for a sell. And we have mitigated also this fair value gap. So now I want to sell. So before my setup occur, you see that here we have taken the sell side liquidity and people may have bought right there to target this buy side liquidity. So you see, both buyers and sellers could have been profitable or losing this day. Personally, if I would have taken this buy and target the buy side liquidity there. For me, the day was done and I would have been profitable as a buyer today. But my bias were more about selling. So I still have made a live profitable trade by selling, but both could have been right, good trades. So this is why I don't like really to call a daily bias. It really depends on the liquidity and the price action, the price structure you see at any given moment. So both buyers and sellers could be profitable this day. So now let's see my entry and my trade. So we have taken the buy side liquidity. Now I'm looking for a shift in market structure, like always. So you remember this shift of market structure? It was the candle that was supposed to make a new high. You see here we have this big red order block. It makes a push up. Then we retest and should make another push up, but instead we make a push down. Okay. Plus we create a fair value gap. So this buy to sell for me was a change of market structure. Therefore, I took my sell right there at 26.272, 1.2627. So stop loss above with the spread. And here you could have also another type of entry, the W. I don't know if you remember. So here is the W. We take this liquidity, you sell right there, stop loss above also. But in this first entry, I put my trade at break even when the price came here. Why did I put to break even? Because we have made this push, this candle rebalanced this fair value gap, and we have closed below. So for me, it was like a reason to put my trade break even. However, since we are in the 1 minute time frame and it's only like 4 pips away from my entry, it's not enough. I did not leave enough room for the trade to develop, and so my break even was too quick. And also here you have another W type of entry. Okay. Now, once the trade have made this, I could have put break even. But yeah, I took break even and then the market crashed. What feeling would this what feeling would you feel once this happens? And I'm sure for most people it would already happen more than once. You know, the price takes your trade to break even and boom, crash. You would feel crazy, angry. You would like to insult the market, and the market is against you, etc., etc. But yeah, I was feeling frustrated, of course, but I was okay. First, I wanted to enter back here because we closed inside this fair value gap. However, I was okay. Let's wait. Maybe it will make a new high and then redo a shift in market structure, or I will wait lower another entry opportunity, but an entry that respects my criteria and not a random entry just for revenge trading or just because I have missed the perfect trade, whatever. Okay. And here we go. So here you had the crash. We came into an order block, a bullish order block. People will want to buy right there. And for me, if we make a breakout structure inducement type, I would be interested to sell again because this would create more buyers and more liquidity to take. We have made this fake breakout structure. Now people will want to buy either in this order block or in this one. And there are more stop losses below. Therefore, if I have a shift in market structure entry, after this break, I enter, okay? And here we go. We have made a nice fair value gap right there. This push took the liquidity and we have closed below this order block. So for me, I took the trade right there, manual entry, a stop loss right above, and then boom. Here, I almost wanted to put break even once we pushed below for two reasons. Because we took liquidity, we took buyers stop losses. So now people will be induced to sell. Okay. So I was okay. Now my stop losses could be a target. And the other reason is because the price was very aggressive. But whatever. I mean, I knew, like the trade I took before, it was too quick of a move, like too small to reverse now, and there's still sell-side liquidity to be taken. So I was confident in letting the trade, and if I took the stop loss, it's part of the game, no problem. So I wanted to see more sell-side liquidity to be taken. Therefore, I let my stop losses right there. We made a bit push, like 1.5 pip from my stop loss, but I was not afraid. I let the trade develop, and I reached my TP area. Remember the internal sell side liquidity. So just to show you this one, okay. So I targeted this low at least. And I closed my trade right there at 1.2583. RR a little bit more than 5. I could keep my trade longer because there were still some lows to be taken. But since I took the trade in the middle of the range and not at the top, I know that there are more probability for you to be taken out at break even before or even it can come above and then come back and take the other lows. So when I'm trading not at the extreme, so in the middle, I prefer to take quickly the profits because most of the time the price will take you at break even. If I have kept my trade from there, I would have probably like taken half or more of my position, but I would have let the trade continue. Now, as I said in my first video, transparency is very important for me and for you also. So this is my entries. I'm not afraid to show. So I entered at 26.13 and I exited at 25.82. I said 83, but I mean it's the same. So I don't care. I don't really want to show my profits or whatever, but just for transparency matters, I just took a screenshot of my platform. And here is the break-even trade I took. So the entry was 26.27, right there. Now, let's go. Yeah, the day after, why I wanted to show this, because look, so this was my intermediate term high that I traded right there. This was the move. I was expecting this day, because it was continuing to push, to take this sell-side liquidity also, but look, it came back to my break-even. So if I have kept the trade, maybe I could have profit from a little more, like maybe 20 pips more, but eventually it came back to break-even and make a short-term high. And the day after, we took all this side liquidity. And I wanted to show you because most people would take this as a structure, and to induce this buy side liquidity, we need to make a breakout structure, and we have made it the day after. I did not catch this trade because I was expecting some inducement, like maybe, you know, a push above right there before a continuation, but it did not happen. It just went down and down and down. No problem. Thursday, I took a EURUSD live trade, which was kind of difficult, but this is why I want to show you how I want to show you that you can't trade literally every day. There is a setup, okay, no matter the price action. So here is the EU daily chart. We have came into the old low and fair value gap. You see the fair value gap right there. We have taken the buy side liquidity, and here now, as the day before, we have taken sell side liquidity. So now my interest is to take some buy side liquidity, some internal buy side liquidity. Maybe we will make a new high, or maybe this is like a short-term low, short-term high, intermediate term high, and maybe we'll make a short-term high right there. But my concern was to take some internal liquidity that you can see here in 1 hour. So the stop losses for me was, it was very clear, because look, you have this order block, boom, it push down, breaks the structure for most people, sell side liquidity for me. So this inducement make me want to take all this buy side liquidity, and especially anything above this order block. It is very clear, very clean. So this is how I determined my bias for the day. Now, in 5 minutes, you see you have also an inducement to sell here, right there. This could be a purple box, and stop losses right above. So people will be, this is internal liquidity, so easy target. So this is my start for the day, as always, 8 Paris time. And we had 2 entries, 2 fair value gap entries, but I didn't take them because I saw this liquidity, those relative equal lows, and I was hesitant to take a trade because we had also positive order flow. So most people would be looking also for, I mean, half people would be looking for buys and maybe half for sell. So I was not really convinced to enter right there. I was maybe expecting, you know, an inducement in this area, you know, an inducement at least before going for buy. So no problem. I missed those 2 entries. So I'm still waiting for another buy opportunity. I'm not changing my mind into becoming a seller just because I missed the 2 buy entries. There is a thing I want to talk about also is, even though buyers were induced to buy, most people would like to buy in order blocks. Okay, so in this area or in this area, but the price didn't come to fill the buys in the order block. It just came to rebalance the fair value gap and continue straight up. So most buyers orders were not taken, and this creates frustration for buyers. And now maybe most people will try to sell because they weren't able to enter a buy trade, and as they are impatient, they want to take a trade, they will change and become a seller. This is how psychology play a big part in trading. And this is why the algorithm is very powerful, because it knows about the psychology of the masses, the traders. So I waited for a setup. So here are the 2 missed trade in 5 minutes. I waited until 11, let's say 11:30. I saw this break of structure and this clean order block. So 1 year ago, this would have been a perfect setup for me to sell. Why? Because this order block took liquidity above and it took liquidity below, break of structure, etc. So all aligned for a sell setup. Maybe I would have waited for a 1 minute confirmation, so another 1 minute break of structure, or maybe I would have probably sniped right there, stop loss above. So first inducement, and now how I see it is this M pattern. You remember the M pattern? So first leg, second leg, and then go. Sorry, misclick. And So this was not enough for me to enter right there. I wanted a confirmation, so a break of structure in 1 minute, so a confirmation for sellers to sell and create more liquidity, more stop losses right above there and above there. So people had their break of structure right there in 1 minute. So this is a 1 minute chart. So this is an unmitigated order block. People would like to sell this order block, stop loss above there or above the main order block in 5 minutes. Here, for me, it's sell side liquidity, those 3 lows. And I put a buy limit at this this line, because for me anything below this line would be good to buy, because this is the M pattern also. So first leg, second leg, I was expecting a mitigation of this imbalance or this one, any of them, but for me I put my buy right there because anything below this would be good to buy. Stop loss below, and here is the result. So we have taken this buy side liquidity. I remember I took half position, or most of my position, 2/3 I think I took right there, because as same thing than before, we are in the middle. Okay, so the trades here I would have kept at least until there, but I know, look here, we almost made it to break even 2 times, you see. So if my trades were just a little bit above 1 pip, not even 1 pip above, I would have taken break even just after this break and no money in the bank. So I would have been very frustrated, like to take the good trade, take no profit there and break even. That's why I always bank some profits, especially when I trade in the middle. And the position size was not very big. I think 0.25%. Usually I trade at 0.5, but we were in the middle, and I would have really preferred to go inside this order block first before making this type of inducement. But as I said earlier, the market does not always do what we expect, so we have to adapt to the current price action. And I also adapted my position size, no problem. If I see that I have my setup parameters that align, even I will still take the trade, but I adapt my position size. I take less position. So I took my final TP right, not I wanted to take right there, and when the price reached there, it came back very fast. So 2 pips below, I think 2 or 3 pips below this area, but still the RR was 13. So very clean trade, and you see this was monodirectional, so always buy, buy, buy. And here they give you no setup for sale. They just give you an unmitigated order block, and then buy again, buy, buy, and buy. And it continued up until next morning. So always, yeah, for transparency matters, this is my position entry. So 0.683, 84 almost. And I took most of my profits, above the last the targets, so the stop loss target at 1.0726. So right there. So this is it for today. Conclusion, is there really a daily bias? So preferably I would call it an actual bias, because it really depends on the price action you have now on any given time or any given session. So maybe people in London session would buy, maybe in New York you can sell, or maybe in one given session you can have, like you saw in GU, two setups, so one buy, one sell. So really it depends, the direction really depends on the liquidity, either the liquidity taken or left behind, and therefore also on inducements. Inducements are very important, okay, because inducement creates more liquidity. But if it comes down to one thing, it's liquidity, always. I remember before, market structure was more important for me than anything else. I had, structure in 1 hour, in daily, in weekly, in 15 minutes, in 1 minute. So I have point of structure everywhere. But now I don't really pay attention to structure, because I know that break of structure is an inducement for people to trade in the other direction. So in the same direction, and it's for me a bias to trade in the opposite direction. So if we have a bullish breakout structure, therefore a bullish range, I want to sell to take the most of the liquidity inside this range, if not also the external range point. And ranges are somehow very subjective also, and it's not really a science. I mean, many people they determine structure differently. Some people determine structure with the highs that make the new low. Some people, it's very subjective. So now I rely only on liquidity. So yeah, do not rely too much on the daily view, because it's hard to predict what scenarios the daily will deliver just by looking at the daily. And do not be married to your scenario or your bias. Adapt to the market liquidity and to the actual market structure. By structure, I do not mean ranges, but the inducements. So there are literally setups every single day, as you saw. Sometimes it's more difficult to see them, or it's more difficult to catch them, but eventually there are setups every day. And the goal is not to get the right trade or the right direction, but rather to catch a move and make some money from the market, no matter if you miss the big trade. For example, the GU, if I have taken the buy setup, it was a smaller, like less pips, probably less risk reward also than the sell setup. But if it have made my percent, I'm still happy. I mean, I'm sure most people would be happy by making 1% every single day, or at least, let's say, 4 days on 5 trading days in the week. So if you make 5% per week, it makes 20% per month. I think for most people, it's enough. Even I find that 10% a month is already good. But yeah, my target is 20% a month every month. This would be a nice target. And remember, 20%, if you are able to make 20% with 10,000, you can make also with 10 millions. So the goal is always the percent. Then the money will come, don't worry. So this is it for today. Thanks for watching, and thanks again for all the love in the comment section, all the people that are commenting and being grateful toward my work. And yeah, do not hesitate to ask if you have some questions or if you have some subject you want me to talk about. At the moment, I can follow, your requests. I don't know if I will have maybe later many subscribers. I will not maybe able to follow everyone's request, but at the moment, you can take advantage of this to ask me questions and whatever. Thank you, guys. See you soon.